lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right? So you're seeing it reflected in...
What is the pinnacle of Ray Dalio investing? The advantages of diversification are widely recognized, including lower risk due to exposure to many revenue streams. Ray Dalio calls diversity the holy grail of investing in his book, Principles. In a recent interview, Ray Dalio stated that the Federal Reserve will need to lower interest rates in order to fight stagflation. Ray Dalio stated that he believes interest rate cuts by central banks worldwide by 2024 will occur as stagflation strikes the international economy. The billionaire investor stated that he believes the US markets would be so badly damaged by a prolonged period of high inflation that rate cuts by the Federal Reserve would be necessary prior to the 2024 election. A combination of high inflation and slow growth is referred to as stagflation. Given its correlation with rising unemployment, declining consumer spending, and decreased earnings, it can be catastrophic for stock markets. Although it's decreased a little to 8.3% in April, inflation is still perilously nearing all-time highs. Dalio believes that the Fed will not be able to control rising prices very soon. An additional factor fueling worries about stagflation is low growth. The OECD reduced its forecast by 1.5 percentage points, and the World Bank recently warned that a recession will be hard to avoid and decrease its global growth projection from 4.1 to 2.9%. Instead of focusing on fixed income investments, Dalio told the Financial Review that he is making inflation-hedged investments in commodities and pricing power stocks. While everyone was waiting for the Federal Reserve to announce its third jumbo interest rate hike, Ray Dalio, the founder of Bridgewater Associates, issued a cautionary note to those who are holding onto optimism that depreciated asset values would soon rise. According to Dalio, the Fed's attempts to control inflation will be unsuccessful unless it persists in rising interest rates significantly. Dalio believes that as a result of these and other causes, including the ongoing conflict in Ukraine, stocks and bonds will likely continue to decline and the US economy will likely enter a recession in 2023 or 2024. In order to reduce inflation, Fed Chairman Jerome Powell has promised that the bank will stop at nothing, even if doing so destroys the economy and markets. But in order to do this, Dalio thinks the Fed needs to increase benchmark interest rates to a level that is between 4 and 5%. The Federal Reserve's third 75 basis point interest rate hike will cause the Fed funds rate to rise beyond 3% for the first time since the financial crisis. According to the CM's Fed Watch tool, futures traders believe that the Fed may hike the benchmark rate to as high as 4.5% by July, which would support trillions of dollars worth of assets. However, traders believe there is only a remote possibility that the rate will rise to 5% prior to another rate cut moving by the Fed. After reaching its greatest point in over 40 years during this summer, inflation in the United States has somewhat decreased. However, when components of core inflation, such as housing costs, proved more tenacious last month than economists had predicted, a report on consumer price pressures in August sent financial markets into a tailspin last week. However, the prolonged energy crisis in Europe has caused prices for everything from consumer products to heat to rise even more sharply. Higher interest rates are a death sentence for real assets like the property market as well as financial assets, as Dalio demonstrated with some of the most fundamental ideas in corporate finance. To put it simply, investors need to adjust the discount rate they use to calculate the present value of future cash flows or interest payments associated with a particular stock or bond as interest rates rise. Investors usually make up for this levy on these future revenue streams, inflation and higher interest rates, by lowering the valuation. Although Dalio stated that he anticipates further losses in stocks, he specifically mentioned the bond market as a source of concern. According to Dalio, the issue is that the Federal Reserve is no longer monetizing the federal government's debt. The rate at which Treasury and mortgage bonds are removed from the central bank's balance sheet will be doubled by the Fed in September. Who will purchase these bonds? Dalio questioned, then pointed out that the real return on bonds has moved significantly lower when adjusted for inflation, which has made pension funds globally and the Chinese central bank less inclined to purchase. When asked about his predictions for the direction of the markets, Dalio responded with a witty jab. Because of the significance of diversification, massive economic developments, growing government debt, rising interest rates, and political unrest, Ray Dalio suggests that cash is a prudent alternative when making investments. Ray Dalio reveals 3 significant economic trends that will impact the future and suggests that cash is a great alternative for investments. A person may only see some important global occurrences in their lifetime, such as pandemics and world wars, which emphasizes the value of researching historical trends to comprehend their causes. As interest payments on the US government's mounting debt increase, the economy may slow down and productivity may decline. Interest rates will climb further, presenting a danger to the global financial system if the US government floods the board market with new bonds due to increasing borrowing and there is no demand. With the rise of populism and China posing a serious threat to the current global order, the United States is facing major political problems and external crisis. In an unstable financial market, diversification across asset classes, currencies, and nations is essential for reducing risks and safeguarding investments. Sort businesses into 3 categories. Steer clear of those who ignore new technology. Keep an eye out for overhyped disruptors, and concentrate on well-established businesses that are using new technology to gain a competitive edge. Cash offers flexibility and serves as a safe haven in the event of unanticipated occurrences or market changes, making it a great addition to any investment strategy for 2024 and beyond. Ray Dalio is a specialist in interpreting generational economic trends. He's identified 3 significant economic shifts that most people believe have never experienced in their lives and that are crucial to knowing where to put money down for a successful future. 3 major events that most people have never seen in their lives are taking place right now, which emphasizes how important it is to be informed of changes occurring throughout the world. When the enormous $33 trillion in interest payments on the US debt start to pile up, there could be a problem. Interest rates will climb further if the US government floods the bond market with new bonds as a result of its increased borrowing, which might have serious negative effects. China represents a serious threat to the current global order, which has traditionally suffered when faced with similar obstacles. To reduce risk and shield investments from unanticipated events, Ray Dalio highlights the value of having a diverse investment portfolio. When it comes to investing in AI, Ray Dalio suggests that businesses be divided into 3 categories: those who ignore new technology, innovate disruptors, and well-established businesses using new technology. For the upcoming years, think about adding cash to your diversified portfolio, manage risk and opportunity, keeping in mind its potential amid market swings, unanticipated events. Governments have been borrowing more money year after year and have no intention of stopping, which is going to cause the US to face difficulties down the road into an interest payment amount. As the amount of debt increases, more tax money is needed to pay interest, which slows down the economy and lowers productivity. This forces firms to earn less money, which may result in cost cutting and downturn the economy. Although cash does not offer the same long-term growth potential as stocks or real estate, it can nevertheless yield significant returns when held as part of a diversified investment strategy as opposed to savings accounts. According to the Australian Financial Review, billionaire hedge fund creator Ray Dalio predicted that in 2024, central banks worldwide will have to lower interest rates as stagflation continues to restrain their economies. According to futures, markets are pricing in rate decreases in the US in about 2 years, as well as in other major economies like the UK. Since more than 60 monetary authorities have already increased borrowing prices in an effort to slow down rapidly rising inflation, a lot of attention is currently focused on how quickly the tightening will go. The US is about to enter a debt crisis, as billionaire investor Ray Dalio predicted just a month ago, and it may already be happening. Charlie Balello, chief market strategist of Creative Planning, tweeted recently that when the long-running political dispute over the sovereign debt ceiling was resolved in early June, the government's borrowing increased an astounding $1 trillion in just 1 month. The total amount of outstanding public debt has reached $32.5 trillion. That's all for today. If you like this video, please give us a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Also, express your valuable thoughts in the comment section below. Until then, bye. Also, spend some time watching other videos on the channel.